AMC currently trading at $5.54. Not much volume traded today. Today we have a lot of stuff to go over, including a bearish and bullish case scenario on AMC and a ton of DD. All I ask you guys to do is stay till the end of the video so you don't have to watch another update video here on YouTube. I don't want to waste anybody's time. Without further ado, let's get right into the video. Alright guys, now I have a bullish and bearish case scenario for AMC. Of course, you know the bullish case scenario on AMC is what we've been tracking back in January, which we've been talking about every single video. However, as of right now, AMC broke below 560, and I said once it broke below 560, you could see 530, and then a break below that, you could see 5, and then sub 5 from there. So back in January, you saw it trade in this parallel channel, a breakthrough, and then trade sideways before not respecting this overall trend line for about a day or so. And you're seeing the same exact thing happen. It traded in the parallel channel, broke below, and now it is fighting this respected trend line. If we trade like this all the way up throughout tomorrow, Friday, then you could see that major rip come Monday, which this is the bullish case scenario, in my opinion, the more likely case scenario. However, there is a very scary case scenario going forward. One thing I want to prep you for is that the bearish case scenario is still bullish in the medium term, but short term, not looking good. Now, the cycle that we have in the yellow is the exact same cycle that played out back in January. However, it matches the chart almost perfectly to how AMC is trading. With that being said, you could see AMC start to scale down back to the recent lows at around $3.95 before ultimately scaling back up and getting that rip. Now, the interesting thing about this is the rip following that would time itself perfectly to the March 14th conversion date and the reverse split vote. And we've saw time and time again, the way catalysts line up with rips and dumps in the stock is very, very interesting, and the way Adam Aaron announces things is very, very sketchy to say the least. But this is the bearish case scenario. You would see a retracement back down to the recent lows on the stock before essentially getting a rip, and it would be fast, it wouldn't be slow. So you'd get that retracement and then boom, it wouldn't trade sideways, it would be over with and start scaling to the upside. Touching on some AMC Ortex numbers real quick, 22.39% short interest, utilization is maxed out. The cost to borrow minimum is sitting at 1%, so some short seller is barely paying a fee. However, the average is still at 312, so the majority of short sellers are paying 3 times their position still, and the max is sitting at 378%. According to Stock Tracker, there's 0 shares available to borrow at a most recent fee of 167.5%. We are losing on the options chain 16,000 calls compared to 36,000 puts. I do believe max pain is sitting around $6. Short exempt volume stacked up over the past week, along with the short percentage rising day by day on AMC. You can see that they are stumping the momentum as hard as they can and fighting the algorithms. Now, a few videos ago, we talked about over 2 billion orders that were canceled on AMC in November alone, and finally we are seeing over 4.3 million fills to deliver in November alone as well, which you could have saw being covered in the beginning of January during this cycle, or those are still out there waiting to be covered on the stock, which is just going to push us even further. Now, GameStop, 550,000 shares available to borrow at a most recent fee of 17%, and we are losing on the options chain. Calls to puts, 5,000 to 7,000. Short exempts still stacked up pretty high for the volume that GameStop trades, as well as the short percentage coming into the 60%. For Bed Bath & Beyond, this thing is sitting at a 443.7% fee, and no shares are left to borrow, along with the short exempts being loaded up on this stock. Market makers and shorts are fighting retail very, very hard to keep Bed Bath & Beyond from flying. Now, do you guys remember when Citadel and Robinhood were throwing each other under the bus? Well, now it's happening again, as US Virgin Islands has said that JP Morgan knowingly, negligently, and unlawfully provided and pulled the levers through which recruiters and victims were paid and was indispensable to the operation and concealment of the Epstein trafficking enterprise. We just saw JP Morgan come out and say something about them. Now they're saying something about JP Morgan, and it's a ping pong game back and forth, which Robinhood and Citadel was involved in during the meme stock rally, the buy button being taken away, etc., etc. And speaking of Robinhood, Robinhood accidentally sold short on COSM quote-unquote meme stock and lost 57 million. Robinhood wasn't selling short through a predatory algo. Robinhood did not reflect the overnight reverse split in customers' accounts and still allowed them to sell pre-market, creating unintended short position for the broker. Disclosing another position, I just bought puts on Robinhood. Also, Robinhood announces a $500 million buyback to buy back most or all of the shares held by Sam Bankman-Fried, which was the CEO of FTX, if you don't know. Before we move on, if you guys haven't hit the like button, I forgot to ask you, also hit that subscribe button. Let's keep it going. Credit Suisse clients pulled record amounts of funds in the fourth quarter, and the bank suffered its biggest annual loss since the 2008 2008 financial crisis. This is Switzerland's second biggest bank, and this is also the bank that gave AMC a price target of below $1. They also got slaughtered on earnings, and Silvergate isn't doing good as well, along with Wells Fargo coming to a $300 million settlement with shareholders who claim in a class action lawsuit that the bank forced unneeded insurance policies on thousands of customers and concealed the practice from investors who lost money after the problem became public. Now give yourself a round of applause, because retail trading orders have accounted for 23% of the market's total volume in late January, which is an all-time high. However, most of us use payment for order flow platforms like Webull and Robinhood, etc., which means market makers are probably banking in money on retail as well. Endeavor Mining CEO says he expects more gold mergers and acquisitions this year. This is the largest gold producer in West Africa. Consolidation seems to be happening across the sector, and there is a rush for physical bullion from citizens around the world, and now big miners. Finally, more layoffs. Disney to lay off 7,000 employees, and speaking of layoffs, it didn't do very well for Meta. Meta in the fourth quarter lost $975 million due to the layoffs that they have completed. Also, Google just lost $100 billion after its AI chatbot gave a wrong answer in its preview, and UK house prices fall for the longest period since 2009. Finally, the Dutch researcher who predicted Turkey-Syria earthquake 3 days early says India and Pakistan is next, so pray for the people in India and Pakistan that this does not happen to them. Also guys, let me know if you are from there in the comments down below. GameStop currently sitting around $20.76. It's honestly looking a little bit better than AMC, I'm not gonna lie, besides the volume. The volume isn't looking too good. However, we are getting red days, so low volume on red days is a good thing to see. With that being said, GameStop is still in the parallel channel that it's been trading in, and I assume it's going to scale back up to 24. Still nothing's happening with GameStop. It does move a lot slower than AMC, but as of right now, the technical side of things, GameStop is looking extremely well. As for the S&P 500, we're sitting at 411.87, and a lot of people are wondering, are we going back into a bear market rally, or will the S&P 500 continue to climb? And as of right now, it did look like it got a double top at 415. However, on the daily chart, it does look pretty good, I'm not gonna lie. A healthy retracement back down to about 410. It based off of this, and it got another pop and rejected at 414. Once the SPY consolidates and re-breaks 414, re-breaks 417, you are going to look at a stronger market going forward. In my opinion, I wouldn't be trading this right now. I would be watching for a break over 417 once again, or a break below 408 to determine whether the SPY is going to continue to rally or is going to sell off even further. Overall guys, this is what I got for you for today's video. Hopefully you found value out of the video, or at least enjoyed watching. Everybody has been killing it in Discord down below, so guys, make sure to not sleep on Discord. Get in there, the link is under the video. Also, thank you for all the support on the recent videos, and a ton of you guys are signing up for Moomoo, but some of you guys aren't making that deposit. Once you sign up and open an account, you've already done the hard part. It took 2 minutes out of your life, but now you can deposit 1 penny into your account to literally get these benefits, so don't miss out on doing that. Shout out to all you guys getting free money using my link. That link will be pinned in the top comments or in the description down below if you guys don't already have Moomoo. Overall, that is what I got for you guys for today's video. As of right now, AMC is trading at $5.48, so throughout the video, it did end up tanking. It broke below that 560 level, and essentially I'm watching a spot for 530 unless AMC can save herself. Overall guys, that is it. I love you all. Lottery Stocks out.